Yeah, Kelly, sales of newly built homes in August just crushed expectations, up 43% from a year ago to a 14-year high. Now, this followed another strong report on sales of existing homes. So housing demand remains high in this new stay-at-home culture of the pandemic. The only red flag is supply. Existing supply is at a record low, and the supply from builders is now almost half of what it was a year ago. Builders simply didn't expect the immediate recovery in demand just after the pandemic hit, and now they are faced with a shortage of land and labor, as well as higher costs for materials. Now, all of this means much higher prices for consumers looking to buy any type of home. Price gains are now in the double digits from a year ago, and for existing homes, and builders are also raising their prices. So bad news for buyers. Great news for the single-family rental market, which is now seeing the biggest demand. One of the biggest players in the space, a REIT, American Homes for Rent, just saw record leasing occupancy in its last quarter. And joining us to discuss is CEO David Singelyn. Thanks so much for joining us.
Thank you, Diana. Glad to be joining you today.
Yeah, you just reported record leasing and occupancy, as I said, and you said you expected that strong demand to continue even past the end of the pandemic. What exactly is driving it?
You know, the demand for single-family rental is not new. It's been occurring for several years. COVID has accelerated it, but I don't see it changing into the future. People realize the value today more than ever what the value proposition is of single-family rentals, and we're well positioned to take advantage of this increased demand.
Now, you also reported about $6 million in COVID-related bad debt. That is tenants unable to pay. How are you dealing with those tenants? And what do you think about the recent eviction moratorium imposed by the CDC? Is that fair to landlords like yourself?
So bad debts for us has a slight uptick. We've deliberately chosen the markets and neighborhoods that we are in, and the weighted average unemployment for our portfolio is less than a national average. As such, we're seeing, in light of the difficult times, we're seeing relatively favorable collection results that are improving from our second quarter results. Evictions are always a last resort, and the eviction moratorium, while it has a temporary impact, long-term, we're comfortable with our collections. And again, we'll use evictions only as a last resort.
David, it's Kelly here back in the studio, and I have a similar question to pick up on. Yep. We've talked about the demand for rental homes, but again, on the supply side, are you going to see increased supply coming from people who are losing their homes because of COVID?
Yeah, begin with supply is short in all of housing sectors. We've seen a significant increase in supply in the single-family rental sector over the last 8 years, from 13 million to 16 million homes, and occupancy has still continued to increase. We're very comfortable that the demand is very strong for our area.